Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Dana Samuelson, who's the president of American Gold Exchange, who are leading national precious metals and rare coin companies specialising in dealer-to-dealer trading and direct sales to the public. Dana has a wealth of experience in precious metals and rare US gold coin buying and selling, starting his company over 25 years ago. And he's going to talk to us about gold and silver, about the precious metal space, and also why it's important, especially I suppose in today's climate, why you should own physical gold and silver. Myself, I do collect gold and silver, have only recently started over the last few years. Hopefully this will be an episode that you can take a lot from. So that's welcome Dana to the podcast. How you doing, Dana?
Good. Thanks for having me.
No, appreciate your time as well. Obviously you're over in the US, but obviously the lot of the conversation that we're going to have is very generic and it's going to be globally as well. So as we always start these podcasts off, I just wondered if you can tell us a little bit about your career. As I mentioned, you started this business 25 years ago, or over 25 years ago. So I just wonder if you can just tell us what you were doing before then, and then obviously what you have been doing during your career.
Yeah, thanks, Rob. So I got out of college in the United States in 1980. On the tail end of the last big inflationary-driven gold and silver price boom. No one was hiring anybody, just like in 2008, 2009, after the great financial crisis. And I ended up getting a job working in a vault for 2 years because I could be trusted, counting, shipping, and weighing stuff. So I literally started at the kitchen sink if it were a restaurant. I got my lucky break going to work for Jim Blanchard, in 1983. Jim is the man that is most personally responsible for the private re-legalization of gold ownership in the United States in 1974. When we went off the gold standard in the US in 1971, Jim knew that would mean the dollar would lose purchasing power. So he started the grassroots organization, the National Committee for Monetary Reform, to drive the re-legalization of gold effort, which he was successful in 1974. And when that happened, people asked him, okay, where do we buy physical gold and silver? And he said, well, I'll sell it to you. By 1980, he had the largest mail order precious metals and coin company in the United States. And I went to work for Jim in 1983, and I spent 12 years working for him on and off, 8 years on my first tour of duty, as I like to say, and then actually 3 years on my second, before I moved to Austin and started my own company, American Gold Exchange. So I got a real lucky break working for Jim, who was the godfather of our industry, basically. So I've been in the precious metals and vintage coin arena my entire professional career for 43 years. It's all I know how to do. Don't ask me to do anything else. It's really all I know how to do well.
You mentioned obviously going off the gold, going off gold in 1971. Nixon took the dollar off the gold exchange, or took it off the monetary system. I wondered if you can just give our audience a little bit about that significant moment, because I think, and I've listened to a variety of different people speak about this, and I think at that particular time, people didn't actually realise what effect that had on everyone's wealth. So just wondering if you could just tell us a little bit about that.
Well, let me go all the way back to ancient times, where gold and silver were both money and currency, primarily because gold has that unusual great yellow color. It's malleable, it's impervious, and it's scarce. So the kings and the rulers like to have their picture on the gold coins, and silver as well. The ratio between gold to silver in value going back to ancient times all the way to the 1930s was 20 parts silver to 1 part gold, because that's how it was found easily in the ground before modern mining technology. So gold was, and silver were, money and currency all the way until the 1930s. Currency is something we use as a medium of exchange. Money is something that has intrinsic value. A barrel of oil could be considered money, but it's not a usable medium of exchange. Well, in 1933, the US quit making gold coins as money. We continued to have silver coins. Most of the world followed suit by the time World War II started. So gold coins as currency and money went out of the system by World War II. When World War II was over, the US had more gold than any other country in the world, 20,000 tons. We weren't ravaged by war like Europe was, or Asia was. We had a good economy. So instead of having gold as currency and money, we decided to back the paper currency with gold. So under Bretton Woods in 1945, an agreement between the US and 186 other countries, the dollar would become the world's reserve currency, fully backed by gold. We would never print more dollars than we had an ounce of gold in Fort Knox to back it. Well, by the time the inflationary wave started hitting 1965, 66, Lyndon Johnson went on our spending programs with guns and butter, Vietnam War and the social programs. We started to print more money than we actually had gold in Fort Knox, and the world realized it. Nixon was forced to, gold was revalued from $35 an ounce, where it was valued from 1935 all the way to 1968 to $38 an ounce, then to $41 an ounce. And finally, Nixon was forced to take us off of the gold peg to the dollar, because we just didn't have as many ounces of gold in Fort Knox anymore than we were printing paper dollars. We had a big drain on our gold in the late 60s and 70s as our trading partners saw that. They redeemed their dollars for gold and drained Fort Knox down to about 8,300 tons. And that's when Nixon took us off. And that helped to contribute to the inflationary bout that we went through in the 70s, because now politicians could print more money. We could have more debt than we had gold to back it for the first time ever. So fiat currency, paper money today that has no intrinsic value, is what the world's been based on since 1971. Now, we went through a debt-fueled inflationary spiral in the 70s. The rest of the world really didn't get it as bad as we did here because of oil shocks. We had a really calm period from 1983 to 2005. Then we went back to war in the US with Afghanistan. The great financial crisis came, and now debt has just exploded higher. And all countries are printing much more paper currency than they have hard assets or anything to back it with. So debt has just exploded as politicians and governments continue just to spend more and more just by printing more and more money. And it devalues the currency, but what it's also done is push the gold price up to record highs now, $2,000 an ounce US. But it's not really that gold is so expensive. It still buys the same things it used to buy 20 years ago, 40 years ago in relative value. It's that the paper currencies are actually buying that much less. That's really what it's all about. And that's one of the main themes that your listeners should try and understand. It's not that gold is so expensive. It's that the paper money buys less and less today than it ever has before.
Also, I think another important thing to distinguish is currency and money. Obviously, there's various currencies around the world, depending obviously what country you're in. And the general public tend to call currency money, but in theoretic terms, it's different. Currency and money is different, although we call currency money. So I just wonder if you can explain to our audience that scenario, why we actually call currency money and we think it has value.
Well, we've got two generations now, 50 years worth of young people who've grown up with fiat money, currency, fiat currency, and I've been told it is money. But it really doesn't have any value. So here's an example I can give you of how metals hold their purchasing power. This is the last silver quarter the U.S. ever made. It's 1964. In 1964, this quarter would buy you a gallon of gas. Now, the next year, they made a copper nickel coin that has no silver in it. In 1965, that same quarter copper nickel now would buy you a gallon of gas. Then, today, that copper nickel quarter that's still the same as the 1965 quarter in your pocket gets you less than a tenth of a gallon of gas, while this 1964 quarter is worth $5 today US. It'll get you a gallon and a half. So silver has held purchasing power. This is real intrinsic value. It's money. That's what money means. It has intrinsic value. Our currency today has no intrinsic value. The paper is worth the paper it's printed on, and the promise of the full faith and credit of the U.S. government or the British government, whatever government is issued the currency. But we've had currencies been completely devalued through inflation and high inflation, like look at Venezuela or Argentina. I mean, Argentina's inflation rate right now is 100%. 100%. That means what you bought a year ago cost you twice as much today for the same amount of goods. That's currency that has no intrinsic value. Where oil would still buy, a barrel of oil would still buy the same amount a year ago as it buys today because of the way the oil price has gone. But that's not a good medium of exchange. Does that help?
Yeah, no, that understand. Yeah, I mean, I understand it, but I just thought it'd be good to just bring that topic up, because I'd imagine a lot of the listeners that are involved in the mining industry may not necessarily know the difference between currency and money, because, like I said, and most people call currency money when actually it is different.
Right.
So now I appreciate you clearing that up. So I just wondering if you can just tell us a little bit about your company, American Gold Exchange, and obviously where you started and how you developed the company to where it is today.
Well, I learned the physical precious metals industry from working with Jim Blanchard. We had a national mail order company that was the biggest in the country. So that's what I'm schooled in. That's what I created here at American Gold Exchange. And when I founded the company in 1998, we're a national mail order physical precious metals company dealing in modern minted 1 ounce gold and silver. We call them coins. They're really just round bars made by the Royal Canadian Mint, the British Royal Mint, the South African Mint, the Austrian Mint, the Australian Mint, and the US Mint. Now, these various sovereign mints have been making gold and silver coins going back to 1967 with South Africa, 1979 with the Royal Canadian Mint, 1986 with the US Mint. China's making precious metals products. So these are one ounce gold and silver discs that have the right weight, purity, and are manufactured at a small, very tiny premium over their intrinsic metal value. They get shipped in bulk to their distributors worldwide who have major trading accounts with the mints or refineries. We'll talk about refineries in just a second. And then they'll sell to distributors like me who deal with the public. So there's a small premium for manufacturing, distribution, and profit for a dealer like me on these ounces of gold and silver. There's a little bit of friction in physical precious metals because the buy-sell spread is wider than it would normally be for a paper stock or an exchange-traded fund, mining stock, for instance. So the buy-sell spread on an ounce of gold is about 4%. The buy-sell spread on an ounce of silver is about $2. Now, we also deal with refineries, major refineries out of Switzerland, PAMP, Valcambi, Asahi, that make 1 ounce bars in gold, 10 ounce bars in gold, kilogram bars in gold. In silver, they make 1 ounce bars, 10 ounce bars, 100 ounce bars. And there are even 1,000-ounce bars of silver, which probably your mining clients are very familiar with. So we deal in those products as well. I'm also a vintage U.S. pre-1933 gold coin expert. The U.S. made gold coins as currency from 1793 to 1933. Many of them survive today, and they have a collector market on top of their intrinsic metal content. Some are really rare, some are very common, depending on how many are known to survive. So we judge their value in the marketplace today by known survivors, how popular they are, auction prices, demand, how competitively priced they are. So there's a buy-sell spread there as well, and there's a very viable market for gold and silver vintage coins, both here and in Europe. Our coins only go back to 1795. If you tell someone in Great Britain, I've got a coin that's from 1800, they laugh and they go, oh, we've got coins that go back to 1600. So the scale of history is a little different on your side of the pond.
Yeah. Obviously, there's a lot going on in the world at the moment, especially with the whole financial system. I just wondered if you can just give us an update on the actual current monetary system and how we have actually got to this stage.
Well, I think the biggest macro trend people need to be aware of is just debt. I follow the U.S. debt very closely. And to put it into perspective, from 1795 to 1995, the U.S. accumulated $5 trillion in debt. It took us 200 years to get to 5 trillion. And now, less than 30 years later, we're at 31 trillion. Our debt has gone up 6 times what it took us 200 years to do in less than 30 years. And the biggest problem is that the Federal Reserve has been coming to the rescue of the economy, the financial markets, whether they're the bond market, the stock market, the general economy, not through just interest rate manipulation, which was their traditional tool, but through what we now call quantitative easing, right? So they've exploded the amount of debt that we've had many times over in the last 20 years because of the great financial crisis and now because of the COVID lockdowns. And our debt has just gone through the roof. And this inflationary cycle that we're going through now worldwide would have come anyway, I think, if we hadn't have had COVID or the war in the Ukraine. But both of those things have amplified it. And, so it's really, we're in a decade now where the monetary system is being challenged. We had extremely low interest rates for 6-7 years here in the US. And now, to fight inflation, the Fed has raised rates at the fastest rate hike cycle they've had in 40 years to try and snuff inflation out. And it's breaking things in the financial system. You had your problem with British bonds back in last October when the gilt market almost blew up. Who knew that your insurance companies were leveraged in their pension holdings, right? That was a surprise to me. And now we've had Silicon Valley Bank and a couple other banks here in the US fail because they didn't know how to manage their treasury holdings when the interest rates went from 1% to 5%, and they didn't trade their way through that. There was no risk management, so their bond portfolio got upside down. And they were victims also of the boom and bust kind of high-tech industry that they catered to. But it revealed a problem, that there's $2.2 trillion of securities out there today, of which about 600 billion worth are upside down if those security holders are forced to sell, according to Nouriel Roubini, who's a noted economist. So that's 28% of the debt out there, or the credit that's in the credit markets, could potentially be in a major losses if those credit holders are forced to sell corporate bonds or U.S. Treasury bonds at the way the current rates are. So, it's kind of like the Fed has become the doctor. And to save the patient, they lowered interest rates down to 0. But inflation came, which is like the patient's blood pressure. rising. So what do? They raise the rates to fix the blood pressure, but they're gonna kill the patient if they keep going higher and they don't snuff inflation out. That's really the rub. Where they're high enough now where they're breaking things, and if they don't contain inflation and are forced to raise rates even further, that's where the rubber really meets the road. We could have more problems. And they've already said what they're going to do if we get there. They'll go to the same playbook. They'll drop rates and they'll print more money, which will just make the cycle worse. So we're kind of at a tipping point now, whether we survive it or not with the current economic system that we have. Will be yet to be seen. They're good at kicking the can down the road, but interest on U.S. debt was $500 billion last year. Just the interest payment for our country. Now it's going to be $1 trillion this year because rates are so much higher. And it's going to be more than our defense budget. That's never happened in our history. So I don't want to be a doom and gloomer, but our financial system's really straining at the seams from excess debt and now inflation driving interest rates substantially higher. And you've got 40 years of market activity where interest rates have only gone lower. You've got a generation and a half of investors, traders, speculators that have never seen this kind of a situation before. They don't know how to deal with it in real time.
Obviously, what you've explained, I do understand, and I'd imagine some of our audience would as well. But I suppose with what you do, why is it really important to have physical gold or physical silver, whether you're an investor or not? Why is it important to hold some physical gold and silver in your portfolio? Or even if you're not necessarily a big investor, why should you hold physical precious metals?
Well, if you talk to any conservative financial advisor, they'll tell you should have 5 to 10% of your assets in gold and silver as a hedge against inflation, a hedge against financial uncertainty, as a way to hold purchasing power as the buying power of your paper money becomes diluted by the printing presses. So what the World Gold Council suggests is 6 to 8% is actually the sweet spot for holding, because you'll have enough where you do have a counterbalance, but you won't lose opportunity in other areas by being overweighted in metals. So what gold really is portable, transferable wealth. You can hold 100 ounces of gold in your hand. It's about the size of a paperback novel. It weighs about 8 pounds. And right now that's $200,000. It's not quite as easy as carrying $200,000 worth of Bitcoin around in your pocket. But if the power goes off, you don't have to worry about it because you've got real value that's also liquid anywhere. The precious metals market is one of the most liquid markets there is. If you present your metal to a reliable buyer, they'll pay you immediately upon delivery. So it gives you liquidity. I know people that were heavily invested in real estate during the great financial crisis that couldn't refinance properties because bank lending standards tightened way up. So when they had to refinance, they couldn't even get a loan at any rate, right? And that's what's happening again now. Banking is tightening up because of Silicon Valley Bank failing and bankers taking a second look and becoming more strict about their lending standards. So gold gives you liquidity. It's portable wealth. Central banks around the world were gold buyers in the 70s when we went through that inflationary period back then. Between 1980 and 2010, central banks were net sellers of gold. After the great financial crisis, central banks have once again become net buyers of gold, and especially the Chinese have been buying lots of gold on the international market. Whatever they produce in China out of the mines there, they keep. What their long-term play is, I don't know. They may want to, at some point in time, try and present the yuan as a alternative world reserve currency to the dollar, but they don't have open, free markets, transparent markets like we do. So they might have to back that yuan with something partially, perhaps, by gold. So gold is the most liquid, portable asset you can have outside of crypto. It's transferable wealth. It's a hedge against inflation. Gold worked perfectly during the great financial crisis. When that ramped up in 2008, gold was about $800-900 an ounce. It went to 1,900. When gold was about $1,500 an ounce when COVID hit. It's 2,000 today. It keeps setting higher highs and higher lows. And now we're in an inflationary period where interest rates have run up. Gold does well when interest rates fall, and we've probably gotten close to the top of the interest rate cycle. So when the Fed starts to ease here in the US, like bond rates have dropped somewhat in the last 3 months, gold will rally on that. So gold has some real good upside potential here. So gold is private transferable wealth that takes some of your money and gets it out of the banking system and out of paper money that'll only be devalued more and more over time, and gives you something that's liquid and portable. Silver, it takes 85 ounces of silver to equal 1 ounce of gold. So it takes up a lot more room. But what silver gives you is barterability in a crisis. If you want real hard spending money that is a lower denomination than $2,000 per unit, an ounce of silver at $25 an ounce, it's like a $25 bill in your pocket right now. So silver is portable money as well, very liquid, another way to get some of your money out of the banking system and have it as a savings account that you always have, that you don't touch unless you absolutely need it, right? That's really how people should look at gold and silver. 5 to 10% of their assets, you just accumulate it, you hold it. Because over time, it'll only become more valuable, which is exactly what it's done over the last 40 years. It's lumpy. It'll go faster than the debt, or go a little less under the debt rate. But if you track our debt over the last 30 years, when we've exploded it from 5 trillion to 30 trillion, the gold price has pretty much tracked that debt increase directly. Indirectly at times where it's lumpy, but again, it gets a little ahead or a little behind when economics are good or bad. But that's what gold and silver really are. It's portable, transferable, liquid wealth. You hold some of it, your assets, outside of the banking system, and it has no counterparty risk. That's really one of the most important points. And if central banks are buying it, why are they doing that? To hedge against defaults by other currencies and other government bonds. That has to be the only real reason, to hedge themselves against their trading partners. And these are the biggest players in the world, central banks.
You mentioned counterparty risk. I wonder if you can tell our audience what that actually means. And I'm aware, obviously, precious metals don't have any counterparty risk. But I just wonder if you can let our audience know what you actually mean by that.
Well, gold and silver are not an asset that is simultaneously someone else's liability. So if you deposit money in the bank, that bank has a liability to actually give you your money back, right? That is counterparty risk. Most people don't think of their bank deposits, their savings account that way, but that's really what it is. If you invest in a company, whether it's a producer of shampoo or baby powder or gold and silver in the ground, you're betting on that company to produce. When you buy that share of that stock, you're betting on that company's ability to make a profit and manage their business correctly. That's counterparty risk. If you buy a government bond, you're betting that the government will give you your money back over time with interest. That's counterparty risk. Gold and silver do not have that counterparty risk. They're an asset class unto themselves, recognized internationally since ancient times. So they have that's really.
And I suppose also I was going to say, once you buy it and once you hold it, it's yours, and you're not liable to anyone with that. You've got that in your hand. That's yours.
Right. So when bank lending seized up during the last financial crisis, 2008, 9, 10, if you needed liquidity, gold and silver was one way to get it if you had to have it, right? So that's one time recently that we had a real problem with the banking system. And possible we could go through another one. Lending standards are tightening up again now on the back of this financial failure of, a couple of these banks. Well, you had Credit Suisse got bought out by UBS, right? For the same reason. Well, Credit Suisse has been a problem financially for 4 or 5 years, but this just kind of pushed them over the edge. So if there's any kind of banking issues and you need liquidity, that's what gold and silver really do. And we're seeing our sales, have skyrocketed since Silicon Valley Bank failed, because people want to get their money out of the bank. There's been a rush out of smaller banks into the too big to fail banks. And some people are pulling their money out and getting it into precious metals right now for the same reason. But if you just buy consistently, a little bit regularly, whether it's monthly, quarterly, that's really the most cost-effective way and a good way to just keep stacking, as we like to say. But you have to have the discipline to do it.
Yep, certainly. Obviously, you're a precious metals dealer. What's the process? And I was going to say, obviously, a lot of people on this podcast or listen to this podcast are within the mining industry, and they're working in operations. So what's the process for creating, obviously, gold and silver coins or bars? So what's the whole process from operation out in the field to you actually then physically having these coins and bars to then sell to the public?
Right. So the raw metal goes to refineries where they remove the impurities, and they get it into a form where it can be made into either poured into bars, exact weight bars, or stamped into bars, or made into 1 ounce discs for the various sovereign minted coins that are made. So you've got to get it from raw form into a manufacturing form. First, you have to get it pure. Then it's made into the blanks or the increments that are sellable. So typically, larger bars get poured, like 100-ounce bars can be poured or stamped. 1,000-ounce bars get poured into molds. The 1 ounce coins and blanks, they get put into these big sheets, like you would make a pizza crust or a cookie dough, and then they get the discs stamped out of them, and all the big piece that's got all the holes in it gets remelted and redone again. And then those blanks are struck with dyes, or there's, or the bars are struck with dyes to impart the image on it. So now they're in a pure, defined form, guaranteed by the manufacturer for content, weight, and purity. And then they're sold to the authorized distributors who buy from the various manufacturers in bulk. Now, there's 12 U.S. mint distributors worldwide. The PAMP Swiss refinery, the Valcambri refinery, they have several distributors worldwide. So I deal directly with the distributors buying the product right from the source, basically. Then we sell it into smaller increments to our clients. So basically, you have to get it into a form where it's recognized. And we do have a modest but growing problem with Chinese counterfeits. There's a whole little town in the backwoods of China that's knocking off vintage coins. They're knocking off, just like they've been knocking off Rolex watches and Gucci bags for decades. Now they're knocking off modern bullion products as well. And they can fake a 1 ounce gold bar pretty well. They take tungsten, which has a density similar to gold, and they plate it with gold. And it looks good. It's a little bigger than it should be because the density isn't quite right, but they can get the weight right, they can get the look right, but they can't get the size quite right because it has to be a little bit bigger if it's going to weigh 1 ounce exactly. Now, sovereign mints around the world have started to add design elements into their coins, round bars that they're making, that make it harder for the counterfeiters to replicate. So every mint around the world has virtually done that in the last 5 years to protect the integrity of the product. So the most important thing, if you've never bought precious metals and you want to own some, is go to a reputable, long-standing dealer who has a great track record, good client reviews, has been in the business a long time. This is our livelihood. It's incumbent upon us to protect the merchandise the integrity of the merchandise that we're buying and selling, right? So go find a long-standing dealer in the community with good client reviews and a good track record, and do business with reputable dealers, both buying and selling. We're having issues with private sales via some of the local, internet. They're not companies, trading platforms here in the U.S. Craigslist, we're a private sale. That's where some of these things get sold. People think they're getting a deal, but they're not really getting one. Some of the major auction platforms, this stuff gets into, and the auction companies don't realize it all the time, right? So some of that stuff gets through, and they don't police it well if they don't know. Now, a guy like me, I see literally millions of ounces of gold and silver every year. Something that's off looking or doesn't test right comes through here, I reject it. I'll never resell it. I'll either won't buy it, or if I make a mistake, it'll go into the melting pot, right? So that's what you need to do, is find a reputable dealer. Be careful of private sales. Be careful of online auction platforms for deals, and get product that's sovereign minted is better actually than some of the bars these days. The bars are good bars, but I think as this problem continues, there may be a sellability issue with bars in the future, because the counterfeiters are actually getting quite good making the plainer design on the bars look good.
Yeah. Can you explain how physical precious metals are traded? I.e., how can they be bought and sold? For instance, if our listeners were to go and buy some silver and gold, and at a later date they want to sell, how do they go about doing that?
Well, like I mentioned earlier, there's a little friction in the transaction because the buy-sell spreads are kind of wide compared to most traditional assets. But again, these are physical assets. So if you want to buy an ounce of gold from me, I'm going to sell it to you at 4 to 5% over the gold price. I'm going to pay the mint and the distributor 3%. So really, I'm making 1 to 2% on that transaction, but your cost is 4 to 5. And now, if you want to take that ounce and turn around and sell it back to me, I'll pay you 1% over the gold price for it. So the spread is 4 to 5. It's 3 to 4% on an ounce of gold. Right, so that's how we make our money on the margin, the buy-sell spread. And it's a little wider than, there's a wholesale spread and then there's a retail spread, right? So the wholesale spread's narrower, the retail spread's a little wider. It's pretty simple. That's the way it works. We buy, I buy from the refineries, 1,000-ounce lots of 1,000 bars, 1,000-ounce bars in a clip, 500-ounce silver coins. They come in boxes. We call them monster boxes. They come strapped and sealed with the tubes of coins, 20 or 25 coins per tube inside a 500-ounce box. Sometimes we'll buy 10,000 of those ounces at a time, 20 boxes. Gold comes in tubes of 10 or 20 from the various mints. So, I mean, the beauty of it is you can buy in bulk and save a little money on a larger transaction per unit. We give volume discounts, but when you want to sell, you can sell whatever you want, an ounce, 5 ounces, 500 ounces, whatever you want to. But it's a physical business. You have to, find a dealer you want to buy from. You lock in the price of the transaction at the point of sale. The gold and silver prices are always, going up and down on the international markets, the paper markets. That's what we base the spot price on. And then the premiums is figured in and the profits figured in, and then your price is locked in. So my company will lock clients in over the phone when they want to buy, say, up to $20,000 or $30,000 worth of product. If you're a new client, we'll give you that credit on a purchase, assuming you'll pay us. If the price goes up, we're going to hold the price in. Price goes down, you still have to pay us. If you don't send the money and the price goes down, well, next time we won't give you that courtesy of that credit. Now, we don't ship without getting paid and having good funds, but we'll give you that credit while we're waiting for your money to come in. Once we have an established client, we'll offer larger amounts of credit to people we've done regular business with. But that's how it's done. When we ship it with the post office registered mail, we have private insurance with some of the private carriers, and we deliver it. When you get your metal, if you're not buying it over the counter from a local dealer, you want to inspect it. Make sure you got what you're supposed to get. Everything that we do when we buy it or sell it via the mail, we do it under camera in our office. So we have a videotape of what went in that box that we sent you or what came out of that box that you sent us. So if there's ever any discrepancies, we can go right to the tape and have a video record of what actually happened. And that's for our protection as well as yours. That's basically the process. It's like buying anything on Amazon or other mail order places. It's just a metal that price goes up and down, and you do have to make sure you get the right product.
Can you do you have any specific products or manufacturers that you can recommend or don't recommend?
Well, I do recommend the major sovereign mints: the U.S. Mint, the Royal Canadian Mint, the British Royal Mint, the Austrian Mint, the Australian Mint. These are the big, and the South African Mint. These are the major sovereign mints whose products are competitively priced. They're widely traded. So you can take these products to any reputable precious metals dealer, no matter who you bought them from, and sell them easily. The refineries that we work with are the major refineries. There's PAMP Swiss, there's Credit Suisse in Switzerland, there's Valcambi, and there's Asahi, which used to be Johnson Matthey. So these refineries make 1 ounce bars of gold, 10 ounce, kilogram, 32.15 ounce bars. They make silver bars, 10 ounce, 100 ounce. And then there's a whole host of refineries that make 1,000 ounce bars that go to the warehouses for the London Bullion Market Exchange or the COMEX warehouses that the futures contracts are traded against. Right. So these are the main products. I mean, there's a whole ton of other ones. You can get 5 ounce silver coins that have skulls on them. You can buy 10 ounce silver bullets, but we stick with a mainstream product. If you go onto my website, everything that we have on our website is mainstream, widely traded, competitively priced, immediately liquid product. We don't deal in a lot of oddball curiosity stuff, which some other dealers have gone to doing here in the States. Bread and butter product is what I call it.
So if our audience, obviously after listening to this and doing some more research, are looking to buy some physical gold or silver, I suppose another consideration is, where do they store them? I wonder if you can give some recommendations around storage and also about insurance.
Well, storage is a conundrum. We used to recommend storing in your bank safe deposit box because they've got big, locked doors, security systems, but you don't want to have your metal in a bank anymore, because what if there's a bank holiday and you can't get to it? There are private safe deposit box facilities in the US, not many of them, but there are some good ones where you can store your money in something that looks like a bank safe deposit box, only it's privately run. So that's an option. There are a couple professional storage warehouses here in the United States that we recommend for clients who are storing with an IRA. You can put gold and silver in your IRA here in the United States, but you have to have a custodian to hold it in most instances. So these professionally run warehouses cater to, IRA companies that manage those accounts and are responsible for that for their clients. But we'll sell to a client, to their IRA, and deliver it to the warehouse on behalf of the IRA custodian and the client. You can store at home with a home safe. I've seen people put their precious metals into a sealed PVC pipe and bury it in their backyard. So that's one way to do it. We have a safe company that we recommend here that is a good company if you want to have a home safe. When I had my previous home, not the home I'm living in now, but my previous home, when I had it remodeled, I had a in-ground safe put in and a cabinet built over it with a false bottom in it. So I was the only one that knew about it, and I could get in and out of it whenever I wanted to. When I sold the house I didn't list it on the agreement. I told the new owners about it about a month later, and they were happy. They got an extra benefit. So that you can do that as well. Insurance, there are some niche companies that specialize in this kind of insurance, like you would get maybe a specialty company to insure your jewelry, because precious metals are like jewelry. They're valuable and they can be moved around. Insurance companies like it when the metal stays somewhere and doesn't move and they know it's safe. But your average insurance company will charge you higher premiums because it's not a niche market, right? So you want to try and find an insurance company that specializes in that. So we have a couple names that we recommend here in the States for that. But those are the things that you want to look for. You want to find some place where it's safe, where you can sleep at night knowing that your metal is safe, that someone else can't easily get it or steal it. You want to make sure that you're not the only one who knows where it is, and if in case something happens to you, right, which has happened. But again, you want to have it somewhere safe where you can sleep at night and hopefully have immediate access to it. And those two things, access and safety, aren't always the same place. So you just have to figure out what's right for you. Gold doesn't take up very much room. It's very compact. A lot of value can go in a small space. Silver, not so much. It takes a lot more room. So that's really where the rub is. Where do people want to store a lot of silver?
Yeah, I understand. And those are obviously listening around the world. I'd imagine there is certain places where you can store your gold and silver. I'm in the UK. I have a storage facility, although it's a few hours away. I have a storage facility which is private by a private owned company that you're able to store your precious metals. So wherever you're living, there will be facilities that you could store your precious metals. Obviously, as a precious metals dealer, are there reporting requirements for buying and selling? And where do you have to report to the government your sort of client transactions?
Well, I'm a U.S. dealer. I don't deliver outside of the United States because I don't want to be an import-export expert. And each country has different requirements: value-added tax, declaration at the border. So my laws are U.S. laws, and that's all I really need to worry about. I have two distinct laws. I have a cash reporting requirement. If you pay me in cash, and by cash I mean green dollar bills, or cashier's checks, are deemed cash equivalent. Postal money orders are deemed cash equivalent. If you pay me in $10,000 or more in any of these forms of money in a single or related transactions, I have to file a form 8300, which tells the government I got this cash money. And it goes back to the 80s when drug dealers were using used car dealers and precious metals dealers to launder their money with. That's as simple as that. If you pay us with a personal check from your bank or a bank wire, that's not considered cash. So you can pay us, $1 million and nobody cares. But if you give me $10,001, then I have to report it. That's number one. Number two goes back to same time frame, the 80s, and drug dealers selling precious metals to launder their money. So we have precious metals reporting requirements. There are certain specific items that are reportable to the IRS on a 1099-B, like a stock sale, when you sell me, a reputable dealer, 25 ounces or more of gold or 1,000 ounces or more of silver. But the defined items on that reportability list are what was deliverable against a COMEX gold and silver contract in 1985. So there are many sovereign minted products minted since then that have not been added to this, we call the IRS's shopping list.
You also deal in obviously vintage coins, pre-1933s that you mentioned, US coins, and pre-World War II European gold coins. What's important to know about those types of gold and silver coins?
Well, most of those are, we don't really see counterfeits of those. So some have collector value over their metal value. Some are simply much more common and still survive today. So they don't really have collector value. For example, there are a lot of European gold coins that are trading sized, British gold sovereigns, Swiss 20 francs, French 20 francs, Denmark 20 kroners. These were all prevalent gold coins that were used as currency until the 1930s. They survive today in uncirculated condition and don't really have any true collector value over their intrinsic metal value. So we buy and sell a lot of those here in the US. You have to really go back to like pre-1800 to get into the collector market for European gold coins. Now for US, we have the US Mint made gold coins from 1795 to 1933. So a lot of these have collector value now because the US is a much bigger market overall for number of people. The number of coins that were made were less relative to the number of people today. And what we use to measure value is known survivors, how many there are today in similar condition. So condition matters. And then popularity, how many people want to own one. It's a supply and demand driven market. Now, some of these coins, survive like they were minted yesterday. Some have been used quite a bit as money, and they still survive because they're gold coins. People don't get rid of them, but they could have a lot of wear on them. So we measure them by quality. We have independent grading services, 2 of them here in the US that are reputable, that the dealer community trusts to get to authenticate them and also to get their surviving condition or grade correct. So there's grades that have for wear, and then there are grades for uncirculated condition. If you put 1,000 coins into a bag, they're all brand new, minted 100 years ago, but when they went into that bag, they were all new. But they hit each other in the bag, so they get what we call bag marks on them. So there's uncirculated, there's choice uncirculated, there's gem uncirculated. The ones that are scruffy from the bottom of the bag, no wear, but contact marks from hitting other coins. And some that look like they just came off the press and they still have virtually no contact marks. The same coin out of that bag going to be worth $2,000, $4,000, or $10,000 today, depending on condition. So we use independent grading services to rate the condition, and then we look at comparables, just like you would buy a house. How many survive like it? How many are better? How popular are they? I mean, there's some really rare little tiny gold coins the size of the end of your pinky, but nobody cares about them because they're too small to see, basically, right? The bigger ones are more popular, so they tend to attract more buyers. And those would be the $20 gold coins here in the US. So it's a supply and demand driven market based on popularity, rarity, scarcity, and that's how values are determined.
I've got 2 more questions. Are there any sort of market trends or recent market developments we should be aware of?
Well, the precious metals prices tend to go counter to the economic activity in the world. So when the economy of the world is good, there's no fear in the economic system, the gold and silver prices tend to come down, and gold and silver tend to climb a wall of worry when there's stress in the market for whatever reason. So we're seeing that again now with inflation, the higher rates, some of the stress that's going on in the banking system. So these are the bigger drivers of the precious metals markets. And the couple of these black swans have popped up out of nowhere in the last year or so because of this much higher interest rate environment. So that's, the gilt problem in Great Britain, the banking problem here in the US now. So you have to look out for these things. In the bigger picture, though, the big trend is that paper money is just continuing to lose its purchasing power, and especially in an inflationary cycle that we're in right now. So gold and silver prices are rising, and we're in a decade where this could last for 4, 5, 6 years longer. We went through 3 inflationary waves in the 60s into the 70s. Most people don't realize this. The first wave was 1966 to 1972. Then we went from 72 to 75. Then we went through another one from 76 to 80. And the second and third waves were bigger than the first and the second because inflation wasn't contained in the first cycle. And that's due to President Nixon pressuring the Federal Reserve Chairman Arthur Burns, to lower the interest rate so he could get reelected in 1972. The Fed knows that today, if they don't take care of inflation now, they don't snuff it out, we could have more persistent inflation. But because the supply chain has been fractured and broken by Trump tariffs and then COVID, and now we have this geopolitical break with what's happening because of the war in the Ukraine and the weaponization of the dollar, and denying certain countries that are on Russia's side access to the SWIFT international banking transfer. We're getting a geopolitical split, and that's being exacerbated now because we've weaponized the dollar. So you've got the dollar's world reserve currency status is slowly being challenged now. Saudi Arabia wants to sell oil to China in yuan. Brazil and China just signed a major trading agreement where they're going to deal in yuan instead of dollars. There's a move away from the dollar as the world's reserve currency. It's not going to affect things that much in the short term, but in the longer term, it could mean that the U.S. hegemony wanes. And this is a big trend that's going to continue that your listeners and watchers should be aware of, because this is really probably one of the biggest factors. China's coming up. They're stepping to the forefront where they were kind of laying back before, but they've got Africa. They've put a lot of infrastructure into Africa, the Silk Road Initiative, and they're trying to make friends around the world so they can secure the resources that their populace is going to need. They have a 5-year plan, a 25-year plan, a 100-year plan. We can't, in the US, we can't tell you what we're going to do next week or next year. It's really sad, actually. And China sees this, so they're stepping up to the plate now. And, the Chinese defense minister just went to Russia the other day, and they're becoming more in sync with Russia and against the US. Now, China still needs us as a trading partner, but we need China too. But they're slowly going to step to the plate. And if the dollar is challenged as the world's reserve currency, which it looks likely that it will be over time, it's going to change how economics work in the world. And that's a trend that your people should follow.
Yeah. And concluding, obviously, we've got listeners from all over the world, in many countries around the world. And obviously, you've given us a lot of information and a lot of content. What are some of the important points that our listeners should be looking at, even if they're new to precious metals investing, or want to sort of explore the possibility of investing in precious metals? What are some of the key takeaways you would say that you could give our audience around, obviously, the whole content that you put out there today? Some of the things that they should be thinking about?
Well, the big macro themes, debt is rampant in the world today. It's doubled to triple what it was just 10, 15 years ago. This inflationary environment is putting stress into the system with these higher rates. Politicians are never going to be disciplined in their spending. So these are trends that are going to continue, that are going to debase the purchasing power of their currencies. In a major theme, gold is hitting close to new record highs here in the US in dollars, $2,000 an ounce. Silver at $25 an ounce is less than half of its 2 previous highs. Silver lags the gold price when these markets move, but it can play catch up very fast when it gets some momentum going. You may not be able to afford an ounce of gold, but you can afford silver. So if you're out there and you want to get started, start with silver. And like I said, I would recommend the sovereign minted 1-ounce silver coins made by the mints that I've talked about. That's a great way to become a stacker, right? And slowly get an accumulation going, because the purchasing power of your fiat money will be diluted over time. And at some point in time, you're going to be very glad that you have that gold and silver savings account that's outside of the banking system, that's immediately liquid, that's portable, that's transferable, that you can give out of the banking system to your heirs, your friends, or God forbid, you need to use some of it to spend in a real economic crisis. Those are really the most basic fundamental themes.
Yeah. Dana, really appreciate your time coming onto the podcast. It's certainly an education. As we mentioned off air before we started recording, I've learned a little bit about this over the last few years. So I understand a lot of the things that you said. I'm not sure whether people within the mining community who actually work within the mining community knows as much as the content that you put out there. So it can be an education to a lot of our audience. If our audience do have some questions that they can ask you, how can they go about doing that? Obviously, those that are in the US or maybe in North America, if they want to reach out to you, how can they go about doing that?
Well, our company is American Gold Exchange. We're located in Austin, Texas. Our website is www.amergold.com, Amergold. And our email address is simply info, I-N-F-O, @amergold.com. To send an email or look at our website. It's information rich, live, transparent pricing. And as I said, we focus only on the mainstream items that are liquid, competitively priced, widely traded, easy to sell. And you can buy online if you'd like to. We have a process that's pretty easy to buy online if you want to do that. But everyone should get started. Buy a little silver. Get a little skin in the game, regardless of where you get it from. Get it from someone reputable, but get a little skin in the game. So you have it, you get used to having it, and then stack a little at a time, as much as you can, till you get to that 6, 7, 8% of assets. You'll be glad you have it in the long run.
Yeah, certainly. And that's how I started as well a few years back. So you can just start by buying a 1 ounce silver coin, which I'm sure everyone will be able to afford. So Dana, really appreciate your time in giving our audience an overview of precious metals and why you should be looking to invest in precious metals, especially at this time. Our audience, thank you for listening. Hope you gain a lot of content there. There's a lot of education there and a lot of golden nuggets. And hopefully you can take some of that away. And look at maybe investing in precious metals yourself. It is a bit of an insurance policy as well. No matter what is happening out there in the world, it's like having an insurance policy on your capital and your wealth. So really appreciate your time. Please share this episode with everyone within the mining industry, but also people outside of the mining industry, because this applies to every single person in the world that can actually learn from this episode. Like I said, there's a lot of information. So really appreciate your continued support. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.